let's head on over to talk to Scott Bauer, the CEO of Prosper Trading Academy, and take a look at a few he's got his eye on. Scott, welcome to Midday Movers. First up, it looks like Kellogg's and Tyson. Talk to us about what you're seeing there. Ticker symbol K and TSN.
All right, so you may have seen my reaction there with Kellogg's, and they're in the middle of this big restructure plan, and this is just an awful report, not from the metrics of what they did last quarter, but guidance. Guidance is what's killing this thing, and you wouldn't know it because in my house there's an abundance of Frosted Flakes and Pringles, but the rest of their brands here, this is really bad, and it's really bad from a technical standpoint in the stock as well.
Yeah, as Tony the Tiger would say, this is not great. I mean, you're talking about a move lower by 8% here, Scott. What's most disappointing is they just recently traded up into a high of 71.05. They've seen a nice trend off that June low of 51.34. I mean, this stock was on the move. We're looking at the intraday move here right now on the 5-minute time frame, coming off that 69 level all the way down into, well, currently trading 63.78. But this has been a move lower from yesterday's close into today. I mean, Scott, where do we go from here? And then secondly, what are you seeing in terms of Tyson?
So I don't see a lot of bullishness in Kellogg's here.
Okay.
I think this one is not looking too good, actually.
Noted.
And I'd be definitely leaning on the short side here. Tyson, however, Ben, I love Tyson. Report, it matched earnings. They missed revenue a little bit. However, the coronavirus is really disrupting meat shipments to China, and China has had that huge shortage of pigs due to the outbreak of that fatal pig disease last year.
Right.
That's something that had actually propelled Tyson back from that $70 range or so, just about 9-10 months ago, all the way up to almost 100 to about 95. We've come back now to a little bit lower than the middle of that range, but coming down to an area here that I think is a strong buy, and a strong buy because if there's any sort of resolution with the virus coming up, not imminently, but if it's on the horizon here, this is going to be one of the first stocks in this space that's going to react positively to it. Yeah,
I want to show our viewers probably why Scott's talking about this area. If we could just pull up this chart real quick, you can see again how we are testing that 75, that 78 area. Certainly there has been some support going all the way back to the spring of last year. Scott, I sense that you don't think that the coronavirus is going to be that long lasting or that impactful if you're somewhat bullish the stock at this lower level. Basically, you think that it's been a bit overdone to the downside, and once this kind of blows over, Tyson could have some upside potential here.
I absolutely do, because even if you take away the effects to the virus, which is obviously extremely serious, they still have that massive shortage of pigs from that disease. Tyson fits right into that.
All right, and I've heard Tyson's well positioned to take advantage of some of that opportunity. Let's move on. You've also got Yum Brands on your radar today. Ticker symbol YUM. I'm noticing currently trading down on the day by about 3.5%. We're in a range they've been in, though. 98, it looks like, up to 107.50. What are you seeing there on the move lower today?
From a technical standpoint, there was a gap, Ben, back in late October, right around 107 area, that just about got filled, which coincided with the 200-day moving average. It just literally got filled just the other day, right before earnings
I'm looking at it now.
Rejected there, right? It rejected there. From a technical standpoint, that's not good. Now, there is some support just below in the stock here, right around 97, 98.
I see that,
so maybe
97.50-ish,
right? Another 5%, but the metrics that came out, their two leading brands were actually split. Pizza Hut, awful, awful metrics, awful guidance.
But the KFC's
Taco
numbers
Bell,
were good.
on the other hand, what's that?
KFC numbers were pretty good, weren't they?
They were, and so was Taco Bell, which is really their, that's their bread and butter. No pun intended there. It wouldn't surprise me at some point if Taco Bell gets spun off at some point, because that is almost a brand in and of itself. But when I look technically at this chart here in Yum, that scares me, that support area of 97.5 or so, because if it breaks there's nothing close by to lend any sort of support.
All right, lastly, Dunkin' Brands. Talk to us about what you're seeing there, Scott.
I like an opportunity on the sell-off here as well, because you know what, their report wasn't so bad, and you know they beat, but the street was really expecting perfection out of this one. It really was. It's been very range bound. If you look at this stock, even off of the highs that it made in August, September of around 85, you know, it's been range bound since then. This range right here where it's trading down to up to about 80-ish. I love this area. There's a massive amount of support in the 73, 74 area, kind of right where it's trading. So I think the street just did not love the report because it was not perfection, even though it was a good report.
Yeah, I'm starting to see a pattern with you liking some of these lower level extremes where we're seeing some support. Yep. We've got Duncan, ticker symbol DNKN currently trading back down to that 73 level. That's the area Scott's talking about. They found support there last fall, and they've been in range between 73 and 80. Scott Bauer, really appreciate you joining us here for a look at a few names you've got your eye on. Go grab yourself a bite to eat, Scott. It sounds like you're kind of hungry today. Scott Bauer is the CEO of Prosper Trading Academy. We're gonna